So this is a stock on which I made 8.52%, if I remember correctly. So as you can see two yellow lines here. So I took two positions. Each position was 2.5%. So I took a total of 5% position size on this stock. But before we get into where I bought, let us look at why I bought the stock in the first place. So first, let me go to the first buy point. Okay, now let's have a look at this stock. Okay, this is where I am making the first purchase, the high of this red candle. First, let us look at the moving averages. The blue, the green, and the red. The 50-day is above the 150-day, which is above the 200-day. So this is a nice, strong, uptrending stage 2 stock. So let me remove the moving averages. So I am only getting into stage 2 stocks, which is the blue, the green, and the red. Then you have price contraction or price consolidation. So if you see here, if you see how price is contracting, the base starts from here. Base is nothing but consolidation, 0.1, 0.2, 0.3, 0.4, 0.5, 0.6. Okay, 1, 2, 3, 4, 5, 6. As you can see, the price is contracting, and whenever there is selling volume, even the volume is contracting. Whenever there is buying volume, the volume is going up. What does that indicate? That indicates institutional accumulation. The big guys are accumulating the stock. This is a good sign. So I use point number 5, this point, the high of this candle as my first buy point. And look what happens the next day. See, it touches that yellow line. Okay, triggers my order. Okay, so I now have 2.5% position and I am at a loss. Now my stop loss is at 8%. So which is way beyond here, somewhere here. Okay, so the price, although it is below my buy price, it is still way above my stop loss. Look what happens next. Now another buy point forms. So if I draw the base again, see 1, 2, 3, 4, 5, 6. Again, 6 points in the base, right? So I have another buy point. So basically the pattern is improving. Okay. And as you can see, the mother baby candle, the range of this candle is completely inside the range of this candle. That's a mother baby candle combination, which is a very powerful pattern. After you see this pattern, there is a greater chance of a breakout. So I took another position here, but see the order is still not triggered. So let's see what happens next. Still not triggered. See, now it gets triggered. So now I am 5% into the stock. I now have 5% position size in the stock. And my stop loss for both of these positions is way here somewhere, around 2,730 or something, which is 8% below these two yellow lines. You can calculate that from the yellow lines here. Okay. So that's my buy price. So now I am 5% into the stock. It's a nice stage 2 stock, which is consolidating, going up. Look what happens next. Continues to go up. Now this is where I sell half of my position because this was a unusual rise. This is 6.63% over and above the previous day close. So by the time the price reaches here, my first position is already up. This position is already up 10%. Okay. And intraday, it was up 20%. So nice time to sell on strength. So I don't remember exactly at what price I sold, but on this day, somewhere in the middle of the day, I end up selling the stock. I don't remember the exact price, but I remember the overall return I made was 8.52% on a total 5% position. After this, it is natural that the stock will consolidate. See, again, it is consolidating, but at low volume. Okay. So that means institutions are not selling. This is retail selling. This is profit booking. And the next candle is very natural. It's a natural pullback. This is a natural reaction, and the stock pulls back up. It goes up 6%, 5.94% in a single day, which is a good sign. So ideally, I should not be selling the stock here, because a stock which breaks out, after breaking out, it gives you a natural reaction. And when it starts going up, that is not the time to sell the stock. But I sold the remaining half here, because the remaining half was up now almost 9.86%. So somewhere during the middle of the day, I sold half. Somewhere during the middle of the day, I sold half here. So my overall net return on this was 8.56%, 8.52% on a 5% position size, which is roughly 0.4 to 0.5% of my overall portfolio, which is a very good return over a period of, 3 to 6 days. Okay. And the reason why I sold this stock, I did not even look at the moving averages. See, it's comfortably above the 21-day moving average. I don't really need to sell the stock. It is bouncing up around the 8-day exponential. So I don't really need to sell the stock. But I wanted this money to finance the risk on my future trades. Sometimes you don't have to look at the chart or the pattern or the sell signal. Sometimes you just take the money on the table and run away from there. Okay. So that you can use that money to finance your future risk. Another reason why I ended up selling the stock was that this base was weak. So if you see, the price goes from here to here. Okay. So point 2 should have been here. After this, the price should have consolidated here. But that did not happen. This is called as a shakeout. These lows were taken out by these three red candles. Okay, so this is called as a shakeout. So whenever a shakeout happens, I draw the base. Okay, whenever this shakeout happens, I draw the base, and I have shaded this uppermost quarter of the base. So I have divided the base into 4 different quarters. So this is the shaded area is the uppermost quarter. So as you can see, when I bought the stock, the price was not even in the uppermost quarter. I would like to see the price go up, fluctuate in the uppermost quarter, okay, consolidate more, and then I would buy the stock and give it some more time, because the stock has had enough time to recover from these lows. Okay, here the stock is consolidating in the second highest quarter, which is not a great sign, although it is in the upper half. But I would have wanted this price action to have happened in the upper shaded area, the topmost quarter. If that would have been the case, I would probably not have sold the stock. So this is very advanced concept that I am teaching you. Please try to understand this. If you have any questions, put me in the comment section. I will try to answer them. But you see my reasons of concern here. The consolidation or the recovery was not strong enough, number one. Number two, I wanted to take the profits, use the money, and finance my future risk. Number three, my position size was getting larger, right? I was increasing my position size in this stock from 2.5%. I went up to 5% very quickly within 2-3 days. So if this setup would have failed, I would have lost a lot of money. Okay, so that I did not want that. So I decided that if I sell it on strength and not only book profit, I raise cash and reduce the overall risk in my portfolio. So I am taking a purely risk management approach here. A lot of people ask me, Rohit, where should I sell? Well, selling decision is a very tricky decision. You have to take into factor a lot of things. Sometimes you would sell just to take some money off the table because you want to finance future risk. It has got nothing to do with the charts. Now, this stock could double from here. Now it is 3,300. It could easily go to 6,000, but I don't care. I'm out of the stock. Now it is forming another base. See, 0.1, 0.2, 0.3, 0.4, but there are no 10 candles in the base. So I'm giving it more time. When it sets up properly, I'm going to jump back in again. But as of now, I have booked nice profit and I'm out of the stock. And that is the most important thing. I sold on strength. I'm sitting on cash, waiting for new base to complete, and I will jump back in again because this stock continues to remain as a stage 2 stock, which is a very good sign. So I hope you learned from this uh, stock you learned from this chart. If you have any questions, just let me know. Thank you so much.